Hello and welcome back to Core Finance for the second of our videos today with Rahul Khanna, who is an FX strategist at Tradermade. Thank you very much for coming on the show. Now we're going to talk about the dollar. You've brought a couple of charts along today. So we'll start off by looking at the 10-year yields and what potentially does that mean for the dollar and where can it go from here?
I think a couple of weeks back I pointed this 212 level on your very show, and I was saying that even though there was this hype about that maybe dollar has based and maybe it's going higher from here, there are a lot of buyers coming in, and I said I'll be careful here because it's testing these critical levels around at that time it was around something like 215, and I said you need to watch out what happens on the yields and don't buy dollar just yet, because if yields don't confirm, then you will be on the wrong side of the trade. And that's what happened. There is absolutely no risk appetite to take yields higher from here. So yield corrected. There was some noise over North Korea. There was also a problem with the Trump administration, and then there was no positive dollar story. Like I said, there's a lack of catalyst, and that's still the case for dollar. We don't see any positive dollar story for us to go long dollar. Market is heavily short dollar, no doubt, and obviously people are looking for that base on dollar, no doubt. But there is no real catalyst to say, well, this is the base. As you can see from the chart itself, it's broken that 212 yields. It's going to 2, like I said last time. It's probably going to test that. We've seen some consolidation. This is a weekly chart, and we've seen some consolidation around that 202, 203 area. That's because North Korea celebrated its founding anniversary, and then they didn't do a nuclear test, and they de-escalated a little bit, and that is why there's the return of risk appetite, as we've seen. Today, dollar has consolidated. If you look just very short term today, so
and
that's
if we look at the dollar index as well, just to highlight this, and this is on the monthly chart.
Yes,
you can see that consolidation still taking place.
Yes, if you look at the monthly chart, as you can see, it's a minor consolidation on a monthly. But if you look at the daily chart, you'll see that it has consolidated a little bit, and that is because of slightly positive story. But again, in the grand scheme of things, nothing changes. You can see that dollar index has broken a very critical level. This is like a 10-year chart. So you can see that 91 sort of got tested a few weeks, last month. And then this month it gave way. Now we're looking for, I think, 2008 high to come into play, which was also sort of tested, in 2009 and then probably in 2010. And I think that before that you can hardly see any. I think 90 could be a level where might be some interim support, but there is no real support before 88.46, which means dollar still have room to go, further down. So I think there are a few things that needs to happen. I think it'll be a good start if US CPI this week comes in slightly positive, as we've seen. That's the biggest data point for this week. There's no data out of Europe this week. Japan is almost, nothing's going to move on that front. So, apart from cable, which has a lot of data coming out for UK, there's hardly anything. There's nothing. So, market is putting all its eggs in one basket, which is the US CPI. So, if you look at US CPI, that has to hold now. It has to be market consensus, because it is already expected to soften a little bit. The consensus is around 1.7%. If it missed that expectation, we can see dollar weakening further. So we need to see that beating expectation on the upside for dollar to first consolidate from here. Like as we've seen in yields, it's broken that 212 support, and now it's probably targeting two area. So we need to see this market move above those support areas to for market to go, well, okay, dollar is consolidating, and this is not going to happen in a day, a week. It could take a few weeks, and I think three critical things probably needs to happen. One is, of course, the data. Data is supreme. So if data starts to come in positive, then that will be wonderful for dollar, and then we'll see some consolidation. But that's not the only thing. The second thing we need to see is some de-escalation of sort of these noise from Korea, because it seems to not go away, and market is sort of jittery. If you know, it's not like the thing is going to be Armageddon, but you know, it doesn't make market comfortable, and hence a market keeps going to safe haven currencies. So that second thing needs to happen, and it, you know, as we know, politics can take its own sweet time. So that could happen over the coming weeks and months. So we don't see that going away very quickly. You know, and the third thing is that there were some rumors about you know, tax plans.
Yes.
By the end of the year, Paul Ryan said that there will be tax plan will be there by the end of the year. But we've seen with Trump administration, whatever they say doesn't come true. Maybe that was just to hold the dollar, you know, briefly, which it didn't after a day. So you know, these things need to happen for us to have a dollar positive story emerging. At the moment, you know, it's not there. So I think you look at dollar, you know, I wouldn't be trying to you know, trying to catch a falling knife here, so as to say. So I think we'll have to wait for some dollar positive story to emerge. Yields can still go lower, as we've seen with the you know, ECB's meeting was sort of you know, slightly neutral. Market was expecting a bit more dovish response, and as you saw with Draghi, he said, you know, don't worry about rates. You know, they're going to be low for, you know, long time to come, and yields corrected. And I think that's the story. People were thinking, okay, deals, you know, sort of yields going to just rally from here. You know, bonds going to just has topped out. As you see, it has, but will take its sweet time to correct. So I think we need to be very careful. I think risk to dollar here, you know, is to the downside from a weak inflation. You know, that's what I would say.
Understood. So yeah, potentially more risk to the downside, but keep an eye on those treasury yields. That's a very strong indicator.
Yes.
Rahul, thank you very much for joining us.
Thank you.